today we're going to be talking about forecasting. It's a part of analyzing financial data. We're going to be, focusing on inflation and how we can use forecasting with inflation, to predict patterns. So, the introduction. So, what are we going to be accomplishing with this slide or with this project? So, we're going to be able to understand inflation and its role in the financial and cost management. We're going to also, talk about trends and forecasting, how we can use these trends to forecast how the inflation is going to be looking like in 10, 5 years. So, let's take a look at why inflation is important. So, why does inflation matter in financial management? It impacts long-term investment strategies, borrowing and lending. It affects the house market. It affects basically everything, the cost of living. In the 1950s, a house was like, I'm pretty sure it was 5% of what a house costs now. If you compare, if somebody from the past, came and talked with somebody from the future, they would be shocked. So it affects assets and liabilities. That's why inflation matters. The higher the inflation is, the more a house is going to cost. The more, when you go to a bank and you ask for a loan, the rate is going to be higher. It influences interest rates and basically, dictates economic stability. So why does inflation matter with cost management? It's crucial for forecasting future costs and setting budget. So it's important to know what inflation is going to look like in 5 years so that governments can allocate, certain budgets, make those necessary changes that they know they have to make because the market is going to be at an all-time high and interest rates are going to be booming. It helps businesses anticipate price changes, in raw materials and operations. That's super important. And it guides strategic pricing to maintain profitability amidst rising costs. So let's go ahead and start with the data source that we use for this project. So we use the World Bank Open Data Platform. It's a globally recognized and reliable source of economic information. I'm going to attach the link so that you guys can check it out. It has a lot of, pretty cool stuff. And it focuses on annual inflation rates and commodity prices indices spanning from the 1960s to the present. So it has a lot of data. That's why I chose it. It's reliable, it's really relevant, and it's really easy to understand. So it ensures accuracy, and it's basically a historical coverage of everything that's been going on with inflation rates and just money wise with the economy. So it also includes, this is important, it includes a lot of sectors. So it includes the energy sector, the agricultural sector, the metal sector, and just other tinier sectors that also, maybe in a minuscule way affect our economy, but they still affect it. So, it's important because we're going to analyze historical inflation trends and create, visual models. I'm going to show what I did. So it's important that we have this data. So methodology, what do we do? So step one was data acquisition. So, we went into the World Bank Open Data Platform and they have an Excel sheet. It's a really complex Excel sheet. There's a lot of, has a lot of sections, and we sort of had to, correct them. We had to correct the sections. There were sections that we didn't need. We didn't need to use them, and it was just gonna complicate like the Tableau when we made it. So, it was great that we found this data set, but we still had to refine it so that we could, get the energy, agricultural, the metals, the indices, so that we can get all that into the Tableau. So step two was the data cleaning, which is what I just talked about. We had to remove irrelevant rows, empty columns. We had to convert the textual data into numeric format, and we had to identify and exclude, missing or inconsistent values to improve reliability. So in the data set, it's an Excel sheet. Sometimes it was separated, so we had to, put the data together so that we can convert it into something visual. So step three was the data analysis. We had to analyze the data. Once we had it together, we had to see the patterns. We had to examine like key indices, the price index, the energy index. We had to see how that affected inflation. We found some specific trends, how the energy sector affects inflation. how agriculture can affect inflation, or does energy affect inflation more than agriculture? That's something that we found out, you know. And obviously we identify the historical patterns. We learned how in the 1960s inflation was down here and now it's all the way up here. It's ridiculous. And there are certain periods where inflation, stabilized and then it just skyrocketed. No, periods of volatility is what we call it. We had to analyze those as well and sort of, get trends, sort of see trends that we can see from the data. So this is just figure one. This is something that we created from the Excel. So we see the recent inflation anomaly. So what what impacts inflation the most? Obviously, pandemic. The pandemic, it just destroyed the economy. So that one had the greatest chunk at 40%. 40% was for pandemic recovery. The energy crisis was huge. It also affected, but not as much as the pandemic. Supply chain issues, we always have those, and policy changes, that always happens. It's inevitable. Those are the smallest chunk, we always have that. But the pandemic and the energy crisis, they affected the economy so much. It was like a jump from here to here. We're going to see it right now. So step 4, we had to visualize, that bar chart that we did, the tableau, we had to visualize the data. We had to highlight the patterns and the anomalies. We had to ensure that that Excel sheet that we had, we could turn it into something clear and something that we can communicate. So here is the tableau that we created. So as you can see, we have energy and we have non-energy. Non-energy is at the top and energy is at the bottom, but they impact the commodity price index. The price index is in the middle. If one of them goes up, the other one also goes up. They stay in harmony. As you can see right here, this is the pandemic right here. Look at how volatile it was. It's just going up and down, up and down, up and down. And I think right here, it was the oil crisis. You can see how it started stable. It goes up. That's the change. It goes back down, and then it's just volatile. Periods of volatility. When they try to stabilize it, but it's still going to, there's always changes. Here it's the worst though. You can't really predict it. Forecasting here, it would be pretty hard, but if you know the right trends from here, this is just a projection of what happened here, just like multiplied times 10. So this is how forecasting can come into this. We can predict inflation. We can predict what's going to happen. If it happened here at a more minuscule scale with something that was less, it's going to happen when something bigger happens. It's going to multiply. It's going to be, even more volatile. So step 5, forecasting, what I just talked about. So forecasting future trends. We use historical patterns to project potential inflation trends. We use statistical insights with visual data representations to also do this. And we can emphasize actionable insights to inform financial and cost management decisions. When we do forecasting, we can give people advice. We can tell them this is going to happen. This is most likely to happen. Do this, invest in this, stay away from this. And the data predictions that we did with the statistics, with the data, with the visual representations, it supports our strategic planning. That's our plan. Our forecasting is like our plan. That's what we have predicted for the future. What are we gonna do to help us or help you stay financially stable or be prepared for the economic crisis? That's why forecasting is really important. So here, look at this. We have inflation trends over time. So in the 1960s, look at the index value. It's so low. Here was the oil crisis. After that, it's just a trend upwards, and it spiked like crazy because here it was like sort of stable, but here it just spiked. It's just gonna keep going that way. I don't think it's ever gonna come back down based on the data that we used. So what were our findings? The World Bank Commodity Price Index has shown a upward trajectory. What I just showed you is it's not showing a sign of coming back down. It's just upwards. So there's going to be long-term inflationary trends globally. Periods of rapid inflation were observed during significant global events such as the 1970s oil crisis, what I was talking about, the 2008 global financial crisis, and the post 2020 pandemic recovery. So let me just go back to figure 2. You can see those affected the price index. And then periods of stabilizations, when the governments try stabilizing after, that volatile market, it highlights that as well. And it shows, how they tried to do that, but it was just, damage control. But, it does stabilize for a little, but then it continues to on that pattern. So this is what we were talking about. Energy really, really affects inflation contribution. Sorry. Look at that. 50%. Agriculture, 30%. Metals, about 15%. And other, 5%. Energy is so important. Let's talk about oil. The oil market. The oil market predicts inflation rates. When we go outside and we look at the gas, if the gas is $3, we know inflation is bad. If it's $2 or even one, I don't even think it's going to be $1.50 anymore. The economy is good. So energy has a really huge impact. I don't think we know, or people don't really take it into consideration. It has a really big impact on inflation, and it could be a really good source for forecasting. So this is what I was talking about. So the energy sector exhibits high volatility, particularly during geopolitical tensions and energy crisis. It spikes in energy prices significantly. It influences overall inflation rates, gasoline, oil. That's really important. And it has a really critical role. Non-energy sectors, they're stable, but they're impacted by shifts in agricultural and raw material prices. Those are really pretty stable. And, it's affected by weather patterns and global demand. So, metal depends on industrial activity. We always have industrial activity. So those are more stable. Energy, it's not that really. So long-term patterns. Inflation demonstrates a cynical behavior influenced by economic policies, demand fluctuations, and external shocks. High inflation periods are typically followed by stabilization as central banks implement corrective measures such as adjusting interest rates. They always try to do that to fix the economy, but it really doesn't help. It just ends up making it worse. And globalization has contributed to synchronized inflation trends across the region, especially in interconnected sectors like energy and raw materials. So recent trends and anomalies, also part of our findings. So post-2020 data reflects unprecedented inflationary pressures caused by disrupted global supply chains. The pandemic did this, we couldn't go outside, we had no contact. It disrupted supply global chains, completely obliterated them. And it increased the demand for energy and raw materials as a lot of economies recovered from the pandemic. So sector recovery patterns. Energy prices have stabilized slower compared to non-energy, and this is due to prolonged geopolitical tensions and, agricultural prices have experienced moderate volatility influenced by climatic factors and export restrictions. So, the conclusion. I'm almost done. I know that was a lot. There's a lot here. I don't want to make this like a 20-minute long presentation. I think it's already at like 15 or 10. So, this is the final. This is why it's important. So it's important to understand inflation trends because it's crucial for financial and cost management decisions. It enables businesses to anticipate cost increases and adjust price strategies accordingly. It helps policymakers implement timely interventions to stabilize the economy. It's so important. Forecasting is so important. It's basically what keeps us financially stable, what the governments use to know what to implement, so that they could be financially stable, so that we can keep the cost of living at a bearable. Right now the cost of living it's there, but it's getting a little bit away from us. It's really high. Forecasting, can help the government maybe bring it down, make it more bearable to live. So, insights into the sector specific behavior can guide targeted strategies. Energy focused policies to mitigate volatility. investments in stable sectors to hedge against inflation risk. So forecasting can also do this. It can help you invest in the right sectors that can guarantee you stability. They guarantee you money. They guarantee that, the inflation won't affect them, There's a lot of things that when you invest in, you can be safe. Forecasting can do this for you. And yeah, forecasting future trends can provide actionable guidance for strategic planning, supporting long term financial planning for organizations, and ensuring sustainable economic growth through informed decision making. It's basically what I just said. Forecasting is basically your plan for the future, what to invest in, your budget, what it's going to look like, how much do I have to save to be safe so that I can provide for my kids in the future. That's what forecasting does. That's why it's so important. Governments use it, individuals use it, everybody, uses this. This is why it's so important, you use data to basically project where it's going to be at. It's not going to be 100% accurate, but it's going to be accurate for the most part. Historical inflation trends indicate a persistent upward trajectory influenced by global events, supply chain dynamics, and policy changes. Sector-specific analysis highlights the significant role of energy sector in driving overall inflation volatility. We talked about this. Long-term patterns reveal inflation behavior with periods of stabilization often following high inflation due to policy interventions. And recent trends, COVID particularly, demonstrate the critical impact of disruptions like pandemic and geopolitical tensions on inflation. So, I hope you learned a little bit about forecasting. I hope, you can implement it more into your life. It's really useful. I think everybody should